Welcome to FXcast. This is our FXcast market analysis for Thursday, May 11th, 2011. In each video, we focus on high probability trading setups. We evaluate the gold chart and compare it to our popular currency pairs. We'll come up with a low volatility watch list, an insight bar watch list. We'll look at the economic calendar, and we have an education spotlight at the end. With that, let's pull up the charts. Okay, as usual, we're starting off with the gold chart. And for the past week, you can see this congestion we've been. As we look at our market profile, you can see we have stayed in this same range. And so we continue to sit on hands, let the market prove itself. It looks like it wants to strengthen, and it's just above some of this volume, what will now be support. So maybe we will break the 20-moving average and actually stay above there. But we have our ascending wedge pattern that we're watching, and again, we're letting gold tell us what it wants to do. We're not going to rush it, we're not going to anticipate it, we're going to let gold be gold. Now when we compare gold with some of our currency pairs, we've got gold and the pound dollar, and we can see the weakness. Now the pound dollar, you could say there is a little more of a risky trade. As I just said, we want to let the market tell us what it wants to do. We've got an abbreviated falling 4, falling 3 pattern here. We got this uptrend line that we're drawing, and we broke it, and we came right back up, and it looks like we want to break down before a little bit more. We see the wick here. You can make an argument that this is support. I would still let it prove itself and let it get down here to 1.6, 1.613, 1.610. And let it, prove that it really does want to break lower to come down to this area. But right now, it is still sitting in the channel. Let's pull up our hourly and see what we got here. Well, there is more congestion to the upside. Here's a little volume pike. Here's a volume peak. So there is some, resistance above us, and there's less below us. Looks like we're getting ready to go in a little vacuum where we could run up to 1.62, but we're going to let this prove itself and see, why did it catch itself down here at 1.610. So I would be interested down here to go short, but again, let's let the market prove itself. Now again, let's compare the dollar with the Aussie dollar, gold, and we can see very similar patterns. And we can see that possibly the Aussie dollar is strengthening a little bit. We're going to redraw this since we have some new lines to draw here, some new candles. We can redraw this. We broke the one uptrend line. Let's look at our new one. And you can come in here and see where we're at, and we can come down here and see where we're at. So again, just like gold, we want to go ahead and let the market prove itself. As a matter of fact, while we're here, let's go ahead and draw that down. And you can kind of see, well, wait a minute, this may redo our gold story. Gold, in addition to strengthening up, may be popping out of these downtrend wicks. So we got to watch above 1500. Above 1500, it'll be interesting. I'm going to sit on hands, but above 1500, gold is certainly interesting. Let's pull up the hourly for the Aussie, and you can see that it is above all of this. It's now support, just like we said for gold. It's now support, and there is room to run higher. So it should be interesting if the Aussie gets above the 20-moving average. You may have an aggressive trade up to this downtrend line. Let's go back to the dollar and gold. So we've got the gold and the euro dollar. Oops, wrong one. Alrighty, and so the weakness that we saw in the euro dollar is firming up, and so we've come back to the 50-moving average. And now what's going to happen here? We had so many lines. I'm not sure why they disappeared, but I mean, there's a zone that we're watching, and we're just above it, and we're right here between the 20-moving average. So, are we going to run up here now to the 20? I don't know. I still say sit on hands for the euro dollar. We may have a downtrend here, and we want to see if this is going to come back, hit the 50 moving average and pull back, and we're going to be prepared to trade that. Or, as I said, are we going to run and hit the 20 moving average? Let's pull up the hourly. And you can see it's trying to get above this volume area. If it gets above it, then that would do well for a run up to the 20 moving average. We're looking at the euro pound. The daily chart is basically sideways, maybe a little hit to up. There's no real pattern we're looking at, but we are looking at a break of the 8830. By the time you get this video, it may have moved without you. Our support is going to be the 20 moving average. We're looking for a break of 8830 to run up to the first swing high at about 89.05, 88.95, and then possibly all the way up to the swing high. But this is sort of like the what we've been seeing with the Aussie dollar, with the strengthening of gold, that this is also showing some strength. So let's pull up the chart and take a look. This one we're looking at is the euro pound, and you can see we're above the 20 moving average on daily. We're above a support level here, and we're above the volume resistance. If this one pulls back to the 20 moving average, I would say there's a little trade we can get in today. It may be leaving us because it's getting to the wick that I was looking at to get in the trade. I'm looking to get in it right now. You can also see right here at this swing high would be one target, which isn't really that far. What I'm really looking for is for this to move all the way up to here. So if you miss this one, you can certainly try to get a second run at it as it moves up into this 8845 price level. We are once again looking at the dollar franc. Again, we have that inverted head and shoulders pattern. We also have a descending wedge that I see putting in now because we're having trouble staying above the 20 moving average. So the inverted head and shoulders pattern was a break above 89.7. And the descending wedge to the downside is a break below 87.85. So let's pull up the charts and take a look. Okay, so our second trader we're looking at is the dollar franc. And we're going to take our horizontal rule and draw a line in here. And that's basically what we're looking at. We have a descending wedge, or we have the inverted head and shoulder. This is what we've been talking about for 2 days. But now, because of the descending wedge, I'm thinking more and more. We couldn't get above the 20 moving average for 2 days. I'm looking more to the downside than I am to the upside. So what we really need to do is get below this point of control on the hourly, and that will allow us to get down and retest this wicks and see if we can get below. It says 88.79. But again, we're watching this, preparing to trade this either way, but we're looking for this right now because we're unable to get above the 20 moving average. I'm thinking that it's going to break to the downside. We are also looking at the pound yen again. Again, we have a descending wedge pattern that we're looking at. But again, we're going to trade this to the upside if we get up there, or we're going to look for a break below all these wicks down at 130.20, 130.19. Let's flip a chart and take a look. Okay, so our third trade is another one we were looking at, and that is the pound yen. Again, another descending wedge, but notice that I said there was an aggressive entry below the 200 moving average, but I'm really waiting for down here 130.19. You can see we went down and pulled right back up, just like these candles here are showing that there are buyers, showing that there is value. So to really get the move down and look, we need to break 130.19 because there is value in this area, and that's why the buyers keep coming up. And that's why we don't have the vacuum. Certainly there is room to go down on our market profile, but you can see there's a lot of volume here because for 4 days, we are going down, up, down, up, down, up. So there is some buyers see some value here. Sellers are seeing value above the 200 moving average. Who's going to win? Don't know. So we need to watch and see which way this is going to resolve. Our low volatility watch list for today is the pound dollar and the dollar franc. Our inside buyer watch list is the dollar yen, and we got the New Zealand Canadian and the New Zealand dollar. Let's pull up the economic calendar. When we come to the economic calendar, we see we have retail sales over for the pound. That helps us see insight on the state of the consumer, whether or not they're buying things, whether or not they have liquid cash that they're spending. Um, we also have some manufacturing data with the CBI Industrial Trend Survey. And the thing this usually tracks back to the interest rate because, again, they're checking the trends of the prices of oil and exports and the cost of goods to see whether or not things are rising, and that usually has to do with inflation. And then we have a slew of releases for the states. We've got jobless claims or more people being laid off. We have existing home sales. Again, the state of the consumer. Are we buying homes? Are we selling homes? We've got the Philly Fed survey. And this usually has to do with the business confidence, showing whether or not what sectors in Philadelphia are hot. And we have leading indicators, and this has a lot to do with the interest rate. And down here we got the Fed balance sheet and the money supply. So a lot of things coming out towards the end of the NYSE, the U.S. trading session. In our education spotlight, we're continuing to talk about the roadblocks that stop us from developing a trader's mindset. And basically, Dr. Rand Howell has these 9 fears, and we've been going through them a couple a day. So today we're going to talk about the fear of self-sabotage and the fear of success and failure. And sometimes that fear of success and failure is what leads to your self-sabotage, blowing your account up. It's one of those things where for those people who are lucky enough, they develop a system and they know their stops, know their risk, yet when it comes time to actually exit a trade at that stop, they get into a tick by tick battle. That's why, again, you have to know who you are. You have to know what level of risk you can handle and be calm. You have to know what level of risk you can handle, and you're going to be emotional. And so I know for me, I have automatic stops. I don't want any emotion in that decision at all. I like to have hard stops, so I know that this is my risk, and if it works, it works. If it doesn't, it doesn't. Some people have the ability to do otherwise. That's great. You have to determine who you are and not get in a tick by tick battle and thus blowing your accounts up. Some people are surprised to see the fear of success, but sure, that's a change. That's something different, and so people are worried about, well, what happens if I'm right? We all understand fear of failure. What happens if I'm wrong? But some people, change, getting out of that comfort zone, makes people make bad decisions. Again, people do self-sabotage their lives and their trading careers. So, again, I think this is key to all of these fears. You have to know who you are as a trader. You have to know where you want to go as a trader. And you have to know what level of risk you can handle and still be a calm, focused, disciplined trader. Thanks, guys, and I'll see you next time.